Check, check. Ladies and gentlemen of the crypto space, we are live at 11:29 a.m. December 11th, Friday. Thank God it's Friday. That's the way we do things around here. Like clockwork. Today's topic, bullish till bearish. And we're not bearish. Damn right, we're not bearish. Today's episode, along with all episodes, is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges. You're either non-custodial or DeFi, or what are you? What have we been talking about? What have we been talking about all year? It's all year long at this point. It's the end of the year. Who's in the stream? Captain Weber's in the house. Lewis in the house. Hi, guys. Always a pleasure. Always a pleasure. Friends and family at this point, guys. That's the way I see it. Let's pop it over to the main screen and see what's going on, because there is a lot going on. Bitcoin ripped through trend support, but bam, bounced off the 200 EMA in the 4-hour, which is not a short-term time range. Sure as hell isn't the daily, so we don't have a mean regression on the daily. That would be one heck of a dip. But that'd be still bullish. If we dip to like 12,700, that's still so bullish. So damn bullish. That'd be a heck of a cup and handle. I don't think we're gonna go that far, guys. But I'm a big fan of mean regressions. A mean regression is such a reset, and that really like just reaffirms, reestablishes the bullish sentiment. It's like it's like a cleansing, so to speak. And that's overwhelmingly what this looks like. Look, the dip before the rip tries to break down. It tries to break down. It was the breakdown was rejected. This is like a breakout that's rejected. This is a breakdown that was rejected. And it's just so cool how little lines in the chart are so meaningful, because they're not lines in the chart, guys. We've talked about this before. It is prevailing sentiment. It is psychological. And this line is at a psychological price point that triggered buying, either psychological or programmatic, which is psychological because someone psychological programmed a bot, which triggered buying and brought us right back into trend formation. Look at the guppies, nice and gray. So look at this trend, guys. Man. So just looking at the 4-hour, and we're not doing like an analysis on other time frames. We can, but just looking at the 4-hour, look at the guppies. Look at this green guppy action that took us from $10,500. This is basically $9,000 worth of green guppy. Then we got a little bit of gray guppy, which is some horizontal price action. The guppies are basically short-term moving averages. Now we got some gray guppy. This is so bullish. So, folks might see it down a little bit, but this is such a bullish chart. It's so cool to see. You got gray guppies, it bounced off the 200 EMA, clearly still within symmetrical triangle trend formation or ascending triangle trend formation, depending on how you want to look at it. Gray guppies, ooh, woo. That's a reset if I've ever seen one. So the problem is, obviously, with all markets, they're impacted by the larger macro system. And man, it's a beast. So this is a crypto. All crypto is a micro cap. How about them apples compared to the broader financial space? And who talks about that nicely? That is, where's Raul's post? Yeah, so Raul, you got to look in my history of my tweets. You got to see this. Man, he's so tapped in. He talks about the size of the various markets. 1.2 quadrillion, 4 quadrillion, 23 trillion, 123 trillion, 70 trillion. Man, we're talking about half a $1 trillion in the crypto space. It's going to change. So much is going to change in the coming years. Absolutely fascinating. So what did I also? So this is the broader sense of the market. Is when Jim starts to call a spade a spade. He said, this is what happened in 1999, where the syndicate desk completely misjudged the public, and the public is back. And so this has to do with the two IPOs yesterday. What was it? DoorDash and Airbnb. They were up like 90% and 110%. So they're pricing the deals, not expecting 100% rip to the upside. So this is just crazy, and he's calling out craziness. Whether he's calling out it's crazy that the desk priced the deal 50% less than where it should have been, or the fact that whether he's just calling out the craziness of the IPO pricing, or he sees the bigger, broader picture that the fact that he's calling out the craziness of the IPO pricing is in fact crazy in itself. You guys see what I'm saying there? This is just a whole nother level. This is like 1999.com euphoria. This is, it's just what is going on. It's nice that the general public that has never been able to invest like this before is investing, but they have absolutely no idea what they're doing, and they are distorting the markets in unsustainable ways. So, you could say it's a new paradigm and it's just going to keep going up. So the bottom line is it keeps going up until it doesn't, and you never know when it's going to stop. So, you know, the biggest thing is if you're buying equities, it's risk. And you're buying max risk. And in many regards, you're probably buying the top because you cannot argue that. I don't think you could argue that we're going to go up for another 10 years. That's crazy. That's crazy talk. Albeit if the Fed just starts printing like $1 trillion a month and juicing the markets, and it's not really printing, it's, the way George Gammon and Stephen Van Meter talk about it, quantitative easing is deflationary. So, but if they just start like juicing the markets however the Fed sees fit, um, they're just going to exacerbate this equities pricing distortion, I guess, and that does support the play that equities just keep going up. How about them apples? Is it right that it's going up? Hell no. It's not right. It's wrong. Is it good? It's horrible because it's not representative of the vast majority of experience that people are going through in this country right now, which is basically getting evicted at the end of the month. Well, it's not a vast majority, but it's, was it 12 million people are going to get evicted at the end of the month? My goodness. Um, Rick G's in the house, always a pleasure. Crypto Chicks in the house, always a pleasure. Lewis, Ren, time to buy more. Change Angel, message me back in agreement that you are the man. Yeah, the boys at Change Angel are a good deal. They've been doing that for a long time. They've always been friends of the Digibuy community, so they're good people. Um, Ren, I had the chart up, Ren BTC. So Ren broke trend formation to the downside, very long-term symmetrical triangle trend formation. As you can see, oh goodness gracious, is it really breaking the falling wedge to the downside? It's going to the orange line, boys. No, this is not a good buying time. You're going to get a better deal on Ren. You're going to get that orange line. Let's drop it down to 30 minutes so I give some. You want a good deal on Ren, you're going to wait 1 hour. Yeah, let's do the 1 hour. So we need the orange line because that's where I see it going to. Price range. I don't know, you're going to get another 10, 15, 20% to the downside. No, another 10% to the downside. Something like that. You're going to get that orange line. So that orange line is a previous support. And it's a support way back when. So that's when support will kick in. That's the start of the run back in August. That's when August started ripping. So bear in mind, that's still up a huge amount, or a fair amount. I'll give it that. It's still up a fair amount compared to like March, definitely January and last year and whatnot. But that's going to be a brutal downside. And clearly, we broke the falling wedge to the downside. Um, no other way to interpret this from a technical perspective, unfortunately. It's unfortunate. All right, Ren. You had your fun, and now you're taking some of that fun away. But it just shows you how volatile the markets are. And this is really why basically anything is risk on in the crypto space, unless you're talking about the two macro players, which is Bitcoin and Ethereum, which in theory fit into the global financial macro narrative. Bitcoin being a pristine treasury asset, a pristine collateral, and Ethereum being basically the shit that's going to disrupt the entire planet. And everything else is related to those two macro players. Cosmos, Polkadot, what have you, XRP and Flare and Cardano. They're going to plug into Ethereum. It's not the other way around. You don't, as we've talked about, we don't disrupt ongoing disruptions, and that's not even crypto talk. That's just status quo, logic, rational talk. Network effect. You can't beat network effect. We've talked about that before. We've talked about before, ladies and gentlemen. Alberto, what's Crypto Chick says? Have you heard of anything about Vox? What is that? Is that the P swap? The P swap liquidity mining? I believe it is. P swap. Vox? P. I don't know. I have to look. The liquidity mining for was it Vox and Ethereum, and you get P swap when it's launched on the what chain is it? Where's that article? Polka swap. Sora, the Sora chain, XOR. Is that Vox? I think that's what you're referring to. No, that's Val. That's Val. So I don't know what Vox is, but I thought Val was Vox. Got that one wrong. So this is cool. I'm interested with. We know what XOR is. What is Val? Either way, I don't have any liquidity to participate, and that's just the bottom line. Can't go all in, can't spread too thin, can't own everything that you want to own. That's the bottom line, and you can't take too much risk. Risk-adjusted returns. This is max risk, and I'm not in a position to take risk, or at least I don't need to put myself in a position to take risk. In any regard, I think there's other options that are better. Maybe like wait for the next plasma lock drop because I think those are going to be a big deal. Just basically smart contracts for Polkadot. Um, you can always check out Subscan to see other high risk plays that have potential for asymmetric returns. So the two smart contract blockchains for Polkadot parachains is Edgeware and Plasm, um, and that's the deal, ladies and gentlemen. So obviously, Edgeware has live validators. There's no reference live validators for Plasma, but that's the deal. The period. So these could potentially be massive deals in the coming years. Years. Notice I said years, guys. So this is all speculative. This is all like new stuff. This isn't Bitcoin and Ethereum. And I could never advocate comfortably to people to take risk. I'm going to always continue to advocate risk off. And if you're taking a risk, it's something that you've assessed and calculated that you feel comfortable with. Captain Weber says 12 mil we owe an average of 5,800 in background utilities. Woo, woo, woo. 12 mil. Yeah. That woo woo was not in a good way. Wow, he's right. So they're not going to pay it. They're probably not going to have January's rent, yet alone the back pay. So what does that mean? That means nothing good. That means nothing good. Stops in the house, always a pleasure. And now you know, I don't want to go through the other headlines and who knows because I think the whole bet is that the central banks have control over the markets, and then that if that proves to be the case, the markets just are unmoved and they keep going up. If they prove to not have full control over the markets, that's when the system will experience a liquidity and a solvency event, as Raul talks about. It's the bottom line. So I think, as always, the appropriate course of action is really the only course of action in a person like me. My mind is to diversify in risk off and non-equity based assets. I mean, clearly, we're not buying bonds, we're not buying treasuries. I'm not a bond trader, and and frankly, it's like Stephen Van Meter talks about the bond trade, whether it's treasury bonds or like corporate or whatever bonds. They're not buying bonds because you're going to have a recurring revenue stream. You're not buying bonds because of the yield. You're buying bonds because the price of the bond is going to go up, and everyone's betting that the yield is going to go negative. And they're doing that because they're taking their money out of equities. So the smart money is still rotating out of, as long as you see bond price and treasury prices going up, the smart money is still taking their money out of risk on and moving it into bonds and treasuries. So fuck that. I'm risk off. And risk off for crypto, as I've said, is Bitcoin, ladies and gentlemen. That's the name of the game. Risk off. Um, yeah, this was a good post. A lot of people like this post. Whoever good girl gone crypto is, she's got a hell of a piece of liquidity. We're at a min fee, a VE curve position. She got much more than I did in the drop. But this is a big deal. So this is an interesting one, and I'll focus on this for a good couple of minutes. Um, we talk about risk off, which is where the vast majority of your value should be stored, which is, I still argue, gold and Bitcoin. Raul's in a position to be a bit more risk on because Bitcoin is more risk on as compared to gold. But the data that he has, he's making a rational decision. Bitcoin's going to outperform gold. But I like gold too. So maybe it's not only the question which is going to outperform the most, but it's what you like. So I like gold. Gold is cool. So I want to own some gold. I have my gold. So risk off gold, a bit risk on, but still risk off Bitcoin, crypto space risk off, and yield bearing instruments. So this is kind of going into a short monologue about portfolio structure. And then look at the volatility. So Bitcoin rips, and then it dips, and everything else dips hard. Damn, what's going on with Curve? Is that a candle? That's just a candle. So I don't know about you guys, but I'm down like 100 grand this week. So when it dips, it dips. So that's why you got to structure the portfolio as such and focus on, as I say, risk off and yield production. Because in the coming years, if you're producing, $400 or $500 a month in yield now, in the coming years, the hope is that's $4,000 or $5,000 a month, or dare I say, $40,000 a month. So I think curve is a big deal, as I've spoken about, for this one line right here. So if you have any questions about this one line, because I think this one line will change lives. And the best part is this isn't fully risk on. This is much less risk than owning certain assets. Because you're not owning an asset in this situation. What you're doing is you're providing liquidity, which I argue it actually is a non-taxable event based on IRS Q&A documentation. So you can provide liquidity to Curve and receive Curve yield, which entitles you to a percentage of platform admin fees, which in turn can be used to leverage or create more Curve yield, and in turn creating more three curve emissions. So as you can see, it's a self-sustaining growth process. That's not risk on because you don't have to buy curve. Now, clearly, if you're in a position with extra money, you can buy curve and juice the process, but you don't need to. Um, you don't need to. So, for instance, I took Bitcoin, I put it into MakerDAO, as I've said. I've a debt, and I use that debt for my liquidity position in the Curve protocol, in the compound pool, of which I would argue none of these are a taxable event. I MakerDAO, no way. That is, I am. This is my account. I'm transferring an asset from one account to another account. They're my accounts. So I put a post out on Twitter yesterday about that, and I think that's a very reasonable position to be had, especially given the specific semantics of the text that is publicly available, published on an actual IRS website, their interpretation. Or at least that's the extent of the information that's available. So we must make decisions based on it. I don't think depositing Bitcoin into here is a taxable event. So bear in mind that does bring up the question of like Ren BTC. I'd have to think about that, particularly because you got to frame it as a deposit rather than a transfer of Bitcoin into Ren BTC or WBTC, which I think, briefly thinking about it, and I'm pretty sure if I think about it more, we could frame that as a deposit from our account into our account. Because we have a capacity to withdraw based on our keys, and because our keys control the asset, it means it's our account. That's the bottom line. Lewis talking about Bitcoin. Where did my tea leaves show? Bullish, baby. This is the bottom line. Bullish till bearish, and we're not bearish. This is bullish. Look how bullish this is, guys. Yeah, we just kind of started the stream, and then look at the green guppies since, what's that, October 9th, give or take, October 8th? That's some serious green guppies, followed by some horizontal gray guppies, more green guppies. It's like a blow off, horizontal gray guppies, a nice reset, which is a mean regression. Didn't do a full mean regression back here, so maybe this is the mean regression folks are looking for. So let's look at the price retrace. Oh, it's not. Some folks are looking for 30%. So, but where would 30%? How do we get to 30% is the question. Because those are the types of numbers we saw back in 18. Whoa, wow. How do you like that? 30% would be the daily. That'd be one heck of a mean regression, boys and girls. There's a lot of people looking for the mean regression there. Doesn't mean that we have to have the 30% retrace right now prior to breaching all-time high. I think it'd be really cool to see 30 grand and then a 30% retrace down to 20 grand. And there's our 30%. That'd be pretty cool to see. And that'd be so bullish. You know what that would look like from these 200 EMAs? Albeit it'd be quite departed from the 200 EMA on the daily, because as you got the price continues to appreciate, you're gonna have further deviation from the average until there's eventually a regression, and that's the whole point. If I showed you I've showed you guys the 200 EMA for Tesla. Oh, it's painful. It's painful to look at. So I'm bullish. I'm bullish until I'm bearish, and as of right now, this chart looks good. The daily, I do have a little bit of fear of the mean regression towards the 200 EMA, but on the 4-hour, we did a mean regression to the 200 EMA, bounced solidly. This is a solid bounce if I've ever seen one. Bounced right off the 200 EMA back into trend formation, and currently, as you can see here on this short-term candle, we did a test, or at least we broke support. Support held. And now we're doing a retest. So if for instance, here, if we see a green candle up from here, that's a support held after a retest. And that'd be quite bullish. And that's the way we look at technicals, is confluence. How many bullish little things do we see? And if you have more bullish than bearish, you can say Bitcoin is bullish. So that's what this says right now. Right now, this says Bitcoin is bullish. Interestingly enough, if you saw a mean regression down to here and then a bounce, well, clearly the bounce is bullish. Clearly the breakdown of $7,000, whatever, is quite quite ominous. But a bounce on a 200 EMA is bullish. And that's huge. As long as you don't breach the 200 EMA to the downside, and maybe you print a higher high, and I don't know, something like that, and then you look for other bullish indicators. But as of right now, we're not there. We have not breached the 200 EMA in the 4-hour to the downside. We are above it, so that's what I would look for. If we did breach this to the downside, I'd look for a support flipped resistance. We'd come down, you'd come back up, and then a retest, and then a new lower low. And now you see here, we're bullish until we're bearish. And that's bearish. that would be bearish. And this would be an indication that we're going to go lower and lower and lower until we flip around, until we have more bullish confluence than bearish confluence. And the 200 EMA on the daily is a good target. That'd be a great entry. And that's the way it looks. That's the way it looks. Pellet says, if you had a 10K portfolio, my bigger bets other than BTC and Ethereum would have been Aave, Ren, UBT, EWT. Now, yeah, UBT, EWT. I mean, UBT is really cool. I mean, that's just business right there. That's just business. Those boys are up a couple thousand% this year. And EWT, I mean, listen, it's all speculative though, man. That's the deal. The question about the difference between assets is how speculative. You know, the premise for UBT is basically business adoption and business consumption. The premise for EWT is superior to the current pricing and relationship between buyers and sellers in energy and utility markets. So that's not just it's also consumption plus adoption of that entire sector, that entire space. So, that's really why um, it's so speculative. It's kind of like talking about Digibyte. Like Digibyte is data storage and like asset management, but that entails like disrupting like Amazon and Azure and other cloud infrastructure and other record management systems. That's a big disruption. That's a big target. Can it do it? Sure. Is it speculative that it does it? Oh yeah. So that's exactly what those are. UBT, EWT is big speculation. If you're talking about if you like, we just did the analysis of bullishness or bearishness, looking for confluence, the odds of something being more or less likely to do something. Um, it's quite bullish that Bitcoin is a pristine collateral asset, as we've seen corporations are buying it, and and the bullish confluence in the fundamentals is just in addition to the bullish confluence that we're seeing in the technicals. We're seeing corporations buy it. A lot of it, MicroStrategy and Michael Saylor, that's a big deal. And then the insurance company, which is Mass Mutual, and just that's just the tip of the iceberg. And I think that that's just going to continue. But just those two particular things unto themselves contribute to bullish confluence. Glassnode exchange outflows are still going strong. That's a big one. That's supply disruption. If the liquidity on exchanges is dropping, that means we're going to have exacerbated price action both to the upside and the downside. So if there's any demand event, that volatility is going to spike to the upside real quick. You did mention Aave, Ren. I mean, listen, Aave, the narrative is massive that it could be worth 50 billion, 100 billion. Everything could change. Bitcoin goes to 10 trillion, Aave goes to 100 billion. Oh, big whoop. And so there's your 100x on your money. There's 100x on your money. Big Aave is probably about a billion right about now. So you got $1,000 in Aave, it turns into 100 grand. So there's your speculative bet. So bear in mind, you got a $10,000 portfolio. I wouldn't put $1,000 into Aave. That's 10%. Put 1%. 1% bet, $100. $100 turns into 10 grand. If Aave goes 100x on its money, in the next 2, 3, 4, 5 years, that's a massive win. And then in 3, 4, 5 years, you find another bet. And then in 3, 4, 5 years, another bet plays out. Folks got to adjust their time horizon for the big wins. Trying to force a short-term win is the quickest path to getting wrecked. It's not going to happen. The only way to win is to put yourself on the railroad tracks when the train. Let's say you're in Florida and someone's the railroads in Texas, but you're standing on the railroad tracks in Florida, but you got to wait for the train to get to you. And obviously that's pretty bad. That's you trying to commit suicide. So let's not go with that analogy. But you want to stand in front. You got to be in front and let the systemic change come to you. So that's the whole trick to investing, or at least risk off, risk minimize, portfolio management. You want to get ahead. You want to think ahead of where the system is going and position yourself in front of the change. Then when the change happens, if you got 10 bets at 1% apiece and the change happens, and one of those 10 is a systemic change, that's how you win. That's how you win. That's how you grow. Any information on Humble Block 30 business? I don't have too much information. I have talked to Block 30 recently. Block 30, cool. That's big business. You know, they were around before, like all this ETF action, the DeFi, the ERC20 tokenized, basically ETFs. It was a PIDAO, and there's a bunch. So they were around before things started to get tokenized. Um, and they're of anyone, they're in a position to cater to um, general public, people that are not necessarily crypto experienced or crypto new or younger persons. So they could be an integral component to sell bundled products, ETF type products to different not demographic. Well, I guess a different demographic. Like not me. I'm gonna buy the damn crypto assets. But if someone wants exposure to like a couple of different crypto assets and they want to buy a product from a company, that's what Block 30 is going for. And I still think they're going for it. I still think that it's cool. That's the extent of what I know about that, which is a good deal. That's a good deal because, uh, man, this. What do we know? I'm going to wrap this up in a second, ladies and gentlemen. But based on this tweet's commentary, I look forward to retiring in the next couple of years. So Bloomberg, obviously, going to have followers that aren't in the crypto space. 6.8 million followers are going to get comments from people not from the crypto space. And just looking at these comments, we're going to be loaded, boys and girls. These people out there have no idea of the global financial system. They have no idea what happened in September 2019. They have no idea what the Fed and Treasury have done this year. They have no idea what the Republicans and Democrats both did in March with the CARES Act. They're like, oh, we got $1,200. And they have no idea what is going on. Explain why I should buy Bitcoin. If you still need explaining why you should buy Bitcoin, you're missing something big. None. I'm going to go with none. I mean, just it goes none. None. This is a paid ad. Oh, my goodness. There's such a disconnect between the people in the know and the people that have no idea whatsoever the big picture of things that are playing out. This is a freight train of a billion pieces, a giant puzzle of what's playing out. And this is far from simple to understand, and I sure as hell don't understand the whole big picture. But there's a lot of people out there that have been helping me. And I've put together a bit of like a fuzzy hallucination of what is playing out. And I get every now and then I get a good glimpse of what's playing out. It's not as clear as what Lynn sees and what Steven sees and what Raul sees. It's not as clear as these boys. But I sure as hell got a good glimpse of what's going to play out over the next 3, 4, 5, 10 years. And what I know is it will not be what it is today. It's going to be very different because today is not sustainable and it's changing quicker than slower. Thoughts on Claros.io? No idea, never heard of them. I'm happy they won. Can't go all in, can't spread too thin. I have no idea about half the assets out there. I couldn't own it if I wanted to. Listen, I just can't. I don't have it. I don't have it. I need the Bitcoin leverage so it stays there and it's relatively risk off. Damn, look at the gas prices. 114, that's expensive. That means I can't go over to here. I can't go over to my ape tax. Let's see how much these boys. I got a couple hundred. 444 CRV. Some nice YVE CRV. That's good stuff, boys and girls. All right, thank you all. 12:03 p.m. Friday, December 11th. It is another week. It is the weekend. It is, thank God, it's Friday type stuff going on. So smack those thumbs up buttons. Tell everyone to subscribe as always. And I wish you all a wonderful weekend. We're going to do this again next week. See you then. Peace.